Hey guys, Boris from BK Forex. Welcome to our Forex Daily Technicals for 10/31/13. As always, trading foreign exchange on margin carries a high level of risk when not suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading in margin and seek advice from an independent financial advisor if you have any doubts. Well, definitely a strong dollar day today after the FOMC. You can see this in pretty much all the major pairs. Let's take a look at the euro first. The interesting thing with the euro, by the way, was the FOMC itself, of course, wasn't nearly as hawkish as maybe some people thought, but it did have more of a hawkish bent in the sense that they left open the possibility that they could potentially be the very small but still a relatively reasonable chance of a taper in December, and certainly the fact they were thinking about taper much more now than they were before, and that, of course, turned the euro around. What was interesting is that you see how the technicals really were presaging a lot of this move, because yesterday's flip from the 38, big turn, really created much more of a negative bias in the euro. And the move today obviously pushed us to the 37. It looks actually, it's going to be very interesting to see just how much more of a negative sentiment we have, because it's certainly telegraphing that there's a possibility to test the 37s again and try to push through those levels, perhaps in Asia, perhaps in Europe. We'll have to see if there's any counterflow to that end of the month low or anything else that could stop us. But the real support really comes in now at around 36.75 or so. So it's very conceivable that we could test it all the way down to this potential support before euro finds any kind of a footing. Dollar yen, which we've been bullishly talking up for the last 3 or 4 days, definitely played its part, moved through the 98.50. We're now holding above that. This is going to become a very interesting test here because, of course, 99 is a very serious level. Got rejected from there a couple of weeks ago. So in order for us to really ascertain a much more bullish posture for a longer term move, we need to not just capture 99, but hold above it. So it's going to be very interesting to see. There's certainly going to be a lot of resistance over here at 99. We're going to have to see just how much of a selling pressure is going to be as far as the trade goes. To the other side, support now lies 98 and then 97.50 on a corrective level if we get a little bit of profit taking. But generally, given the momentum that we have here, we should be pushing higher. In order for this thing to be bullishly, to signal a bullish move for a potential breakout and then an ultimate move towards the 100 at the year end, we really need to see a forward price action today. So we'll see how this shapes up. Of course, the battle around 99 going to be key. And if they can bust through it, and more importantly, if tomorrow they can hold above 99, that would create a much more positive structure for yen going forward. So we'll see how that develops. Cable following everybody else on the anti-dollar side to the bottom. Although it did held. Let's see if my chart can come back up here. It did hold the 60s for the time being. Well, we'll see. We'll see where it goes today. I think the probe below 60 is going to happen. Also, if we get a big anti-dollar move and the euro starts pushing down, I think cable will follow its way. What does look a little bit sold out and maybe starting to show a little bit of a bottom is the calm dollars with Aussie dollar catching a little bit of support around 94.50 level. It's had a much longer corrective phase here than both the euro or the cable. So it may have a little bit less room to go to the downside. Kiwi, of course, also getting. Let me get the Kiwi here. Where's my Kiwi? Kiwi actually looks much more positive on the move in the sense that we had RBNZ reaffirm again the fact that rates are going to have to go up next year, and that's providing a little bit of a boost. What's interesting about Kiwi here is this 82, definitely a big support level, but, and this is where it's going to get very negative, if we manage to drift back down and then start breaking the 82, this is a double bottom top here, excuse me, double bottom hold here, and if this double bottom starts breaking, that would be quite a negative formation for the Kiwi, and then we could see possibly 81, maybe even 80.5 before we find a little bit of support. Certainly 81.5 is the first level of support below the 82 level. So definitely worth watching this for any possible further weakness. But for now, looks like a double bottom set, and Kiwi looks to be the outperformer, which actually brings me to Euro Kiwi. Where's my Euro Kiwi? Oh, again, I have to pull it up. We looked at this to the long side yesterday, but now what was good yesterday may be bad today. That's the story of the markets. Look at a flame out. We've had 3 consecutive days of really not making further price action. That is something worth taking a shot on to the other side. Meaning that if we can't break up to the upside, it may be a possibility here to go to the downside. So Kiwi holds ground. Euro gives way. We could see 66 before the end of the day today, as we get a little bit of a correction on this particular move. Definitely worth watching. Definitely an interesting possibility as the day develops. Wishing you guys the best of luck, the best of trading. It's a relatively quiet calendar tomorrow. The day after that is going to be a little bit busier. But for now, it's just the reaction post FOMC. We'll see if the dollar continues to be bid in Asia and European trade. Wishing you guys the best of luck. Boris Schlossberg over now.